Welcome to TradeTheNBI.com. This is John. This report is for the 20th. And what a nice start to the holiday trade. Was pretty straightforward what was going on. We were at the resistance of this 2731 algo that we had previously talked about, which happened to correspond really right in line with the 38% Fibonacci line. And what we had was the ABM green. Right around the 2720, and once we started to move below the 2731, I was talking about this to a few members. A break of that ABM green left nothing but the 23. So when we were down 27 points, I'm like, no, you're going to be going all the way to 60. And sure enough, we hit right to the 23. Now, I said at that point, that's usually when, the fail-safe guys jump back in and say, no, we can't move below that. And then they pop it back up, which is exactly what they did. But this is going to be a continual test because you still have a rejection here. This is continuation from DOC orange without a dip below the red line. So even just moving into this negative zone, you're still higher than the previous one, but so is price. So nothing incongruent about that. You also see that you got a higher shakeout, but you're just about to dip below that negative 13.5 line right here. That's this light green chartreuse color, not chartreuse, but it's like I think they call it evergreen or something. But we're also making lower shakeout. So that's the start of the day. Previous day we'd already made one. So we're, pretty darn close to the 23 up there is at 84 1/4. And we're at 84 3/4. So right on the precipice, and that's going to add to a lot of excitement. You can see, though, from a NASDAQ standpoint, much worse. A bigger bloodbath here. We're already retracing those lows, so it's the expectation that if the NASDAQ makes new lows, I think that'll drive the S&P back down to that zero mark. Here's what central bank movement looks like in euro action. Looks like Britain will stay in the EU and nothing will change. And they'll call that Brit exit, and that makes the market happy. But most of this, I think, was the support of the dollar. Certainly makes a big difference without this rise. And can you imagine if this were falling, the movement in the S&P would be even worse than it is. So, of course, defensive move, albeit foolish. The play now is that the economy has stopped all of a sudden and that the Fed will reverse and not raise rates at all. Which leads us to supply and demand of oil, and it's pretty much stabilizing a little bit more at this particular point. Damage has already been done. This is still ugly at best. Could even see some additional downdraft. And that is going to make the dollar happy because you can see what's happening in the Bitcoin world. We're now down to 45 and falling. So anyone who missed it, we talked about this before, was unable to see the short signals that have come through with Bitcoin based off of our indicator readings. We can correct this. It's always good whenever you see those. You can do it in all windows. I usually like to prefer to do it in the window that I'm in because if you don't, you could actually have a dozen charts change depending on how many you have on your setup. But this is as plain as day from the, what was that, 59 or 58.35ish, and you'll just see that we reached a low overnight the other day of 39.92. It was a rebalancing. So don't know where that, I think that's probably a rogue number because to me we're at the lows, and unless something funny has happened, which we'll find out by just adjusting these, this breakdown in cryptocurrency though certainly makes a difference. So there you have it. There's where they're saying that the low broke and then you get this massive rise, but I think that's just a contract alteration. I don't think that we ever traded anywhere below that, so it's kind of an interesting one to read. I was looking at a series of stocks. It was fun to go through because Some of these, they get pretty clear. Facebook has been in the news with its, dire situation. Apple, all of them. And it's fun to go through because a lot of these, there wasn't really much of a surprise, per se. And so, you go back and you look at these with the dip below the red line, boom. We looked at the secondary line. I had 180 as the next point to retrace. And, well, we're at 180, almost 186. So, this isn't like something to be shocked about or afraid of. It's been foretold. I mean, it wasn't brain surgery, which takes us back to the intraday action, which, was quite beautiful. I'll scroll back just a little bit, which was the start of the day marker. You can see right here. And we'll expand this a little bit, makes it easier to see because it was a pretty good sized volume day given the fact that we're in a holiday trade. But we spiked up, and I was posting this one. It was like, okay, that's pretty darn clean. What you ended up having here was the orange, steel breaks below, green comes across the orange, and it's important to have these crossovers. If you don't get the crossovers, it tends to be a little bit less effective. By the next bar, you're already into a DOC spread, along with the crossovers of the steel, everything else, which right at the ABM, and then boom, cascaded right to the lows. A gold candle below the, well, in this case below the 23, draped down to new lows. But the beauty of this is to follow that steel. No reset of the steel, which means what? No change in direction, because the downturn is still in effect. Now that doesn't mean you can't have pops, sure, but what you're looking at the pops for is new opportunities to take advantage of, like this. The green crosses below the orange, spike up of orange at the same time. You're getting the steel crossing, and so literally by the time the next bar opens up, right here you're in a full short snake and gold candle below 38%, which, okay, how hard is that one? But we're talking about, this move, capturing it from 27.45 with my expectation that we would drop down to the 26.80 range for that daily. You can flip it back, that daily 23% right there, 84 and a quarter. It shows you that you can really capture a broad move going forward. We do, though, I think, get a reset later in the day as we continue to make golds below 38, white candles, a series of those at the lows that just kept producing more weakness. Ended up with a decent set of buy configurations that came here a little bit later. We started seeing strong improvement in the shakeout. We were now well above the negative 13 and had stopped with the gold candle setups and everything, and created the initial buy. And I know it gets scary for some people, but it's not that complicated to one when you think about, okay, so I'm at 84.50. You're at the actual 23 daily, setup. So, the 100% right there at zero is at 26.82. Another point below there, you're looking at, just a couple of point stop with the opportunity of, a decent move back. Particularly with the dropping highs, the expectation is that you're going to move back to the upper band. So by the time we go through, we get a secondary pivot, new buy signal. Now you're already back over the 50%, and of course that one leads to the biggest run all the way up to the 100. You get another sell signal that happens right there with the DOC spread, orange rising, steel, blah 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 blah. The rejection of the they all met right there. That was the earliest play. The problem with it was the steel rising and the orange falling. It wasn't until the start of that next bar that you could clearly see the range dip, and then boom, that was a, again, nice short for simple range. You're at the ABM yellow at 98, takes you down here, and you're, somewhere in the 89, 10, 12 points. It's like, depending on where you decided to set stops, but piece of cake. And then I wasn't even awake for this one, but this probably happened in post hours. Right there, you get the beginning move, even more clarity with the separation between the cyan green and the opening of the mouth, which is the orange up, steel straight down, and then boom, you can see, well, that one's led to the lows, and that's where we're at right now. All in all, really good stuff. I think a rather easy day, and this is the nice thing about when the secondary crew comes into trade. They pretty much follow the basics of the aldos, you get that lighter liquidity, and so we get a little bit bigger ranges. And so when we're looking at these ATRs that are climbing, even though we've been reducing now for a while here, we were down to 47.89, probably we'll start to see a spike back up on that since we exceeded far more than that in a given day. But of course it's a rolling average exponentiated, so it takes a little time for it to change quickly. As always, though, I will keep putting up these charts as relevant, but I think that everything's been absolutely spot on. No complaints with that at all. And trade well, and we'll keep at it.